Hello traders. In this video we are going to break down the premium setups shared on the second week of January. We are going to use the same principles and methodology. The first setup is Euro-Australian dollar. This is 4-hour time frame chart. We define clearly a supply zone. Price rejected this zone with a long-legged doji candle, followed by a strong bearish candle. When you see this scenario, the best decision is to wait for pullback. Do not enter right after these strong exhaustions because market always pullbacks. We are going to shift on lower time frame to define the potential zones that price might pull back. On 30 minutes time frame, we noted a supply zone that was created near the previous high. When we have the supply near the top, price can make 100% pullback, chasing the top, the liquidity zone. Be aware of this fact. Our goal is to wait for pullback. The target on this setup is the unfilled gap at the bottom. This zone serves as magnet for the price. Price pullback sharply and filled the supply zone with a large bullish candlestick. In this case I will suggest to wait for candlestick confirmation like engulfing or doji candle, in order to have a high probability setup. Price tested the previous high and rejected with a strong engulfing candle. As we mentioned before, after this exhaustion price pullbacks at least 50% of this candle. This could have been good level to enter short. Price filled the gap at the bottom as we expected. Next setup was New Zealand dollar, Japanese yen. This is a 1-hour chart. Price breakout previous higher low, and we expected a pullback at supply zone that correlate with resistance level. This setup could offer high risk rewards trade. The target is the next demand zone. Price never reached our entry zone, we didn't enter any trade. This is part of the game, we cannot control the market. We plan the trade in advance and react if the market meets our scenario. Of course, we must adapt and reevaluate our plan according to price action.
Make sure to like and subscribe, this encourages us to make more helpful videos in the future.
Let's move on to the next setup. We have here Australian dollar, US dollar. 4-hour time frame. We see clearly a consolidation and break in upside direction. Price created in this way a demand zone. We are visualize this formation with simple lines to understand better. The structure of this pattern is a drop that followed by a base and then a rally. In few words, it's drop, base, rally demand pattern. Our goal is to enter a buy trade at pullback. We are shifting on 30 minutes time frame. Price created an AB equals CD pattern and is touching a resistance level. These factors reinforce our bias that price might pull back from this level. The target in this setup is the unfilled gap, the same principle that we used on the first setup. We are marking a demand zone that is located inside the 4-hour demand. Now, we have clearly defined our potential entry level, and our goal is to see the price action there. We are zooming even more. This is a 15-minute chart. We saw a potential double bottom and waited for price to reach that level, and of course, waiting for a rejection to confirm the pattern. Next level was the 1-hour demand as we are mentioned before. Price pullback sharply and 15-min candle closed below the support level. Now we are looking closely how price will behave once it touches the demand zone. Price rejected this level with several candlestick. The edge of demand zone correlate with point of control of the current day. We had enough confirmation to enter a buy trade. Price reached the target perfectly. If you want to join mentorship program, check the link on the description. The last setup was British pound Japanese yen. We have here a 30 minutes time frame. We are marking the support levels. Price break below the previous higher low, touched the second support and bounced back above this level. Price rejected this zone with an engulfing candle. This was our confirmation for a buy trade. Target is the supply zone on the top. We have similar scenario with previous setup, New Zealand dollar Japanese yen. At supply zone we will look for potential sell trade, and the target will be next fresh demand zone. The trade ran in drawdown and then bounced in upside direction, reaching in this way our target at supply zone. We could have entered later on too, because market created a drop base rally demand pattern, explained before in this video. Now we have a bearish setup, and we need a candlestick rejection to validate it. Price rejected clearly that zone and pullback, offering us a good level to enter short. Price consolidate for a while, creating higher low, and we decided to close 50% of the position near break-even. Then price dropped sharply and reached our targeted demand zone.